Welcome to another edition of YaleNats Financials. Today we're going to be talking about credit and the factors used to calculate your score. If you stay tuned towards the end, I'll let you in on a little method that'll boost anybody's credit score. There are 6 factors in total when determining your credit score, and those are broken down into 3 impact levels: low, medium, and high. One of the low impact factors is the hard inquiry. This is really known whenever you open up a loan, such as a bank loan, a car loan, or a house loan. This is what the banks use to look at your credit score. If it's not a hard pull, it will be referred to as a soft pull. And these are what a lot of smaller banks and smaller loans will give you. Maybe if you take out money from Amscot or you get a store credit card in store. They'll pull a soft loan and they'll let you know that it's a soft loan to let you know that it won't be a hard loan and it won't show up on your credit score. Kind of as a, you have nothing to worry about here. Usually if you get a soft pull and they give you a loan, they will usually increase your credit limit as time goes on and you make on-time payments. The next low impact rating is the total accounts. This is pretty simple. This is the total amount of accounts that you have open, all of them together, or the total amount that you've had and that hasn't been closed for 7 years. Contrary to popular beliefs, it's better to have as much open as possible. I personally have over 20 and I have a really good credit score. Basically, the way that works is banks like to see that you have credit, you can use credit wisely, and you pay your bills on time. Remember, every account reports to the credit bureaus each month. A trick that I use to keep my accounts open, sometimes I'll make a small purchase on one of them and then just pay them off really quick. Usually something small like a stick of bubble gum. On to the medium impact tier. So we're going to start off with average age of accounts. Average age of accounts is pretty simple. So if you open up one account today and you open up one in a year, the 2 that you'll have together will be averaged out at 6 months. Banks want to see that you can keep cards open for a long time. They want to see how trustworthy you are in paying off your bills over and over and over again. This is why average age of accounts is so important. So if you can keep cards open for a long time, you should definitely do this because it'll help your score tremendously. This is how I personally combine it with total number of accounts. I opened up 4 cards in about 6 months a few years ago. So as time goes on, the average age of accounts will all build together. And say if I want to close one that's not giving me value, I can close it and it won't bring my average age down too much. The next medium impact factor is utilization. It's the percentage that you use it on your cards every single month for every single card that you have open. The trick to keep your utilization low is to pay off your credit cards right before the statement closes. So the math behind utilization is pretty simple. If you have one card with a $1,000 limit and you use $500 by the time the statement closes, you will have used 50% of your utilization. A good utilization is anything under 30%. A great utilization is anything under 10%. I would try to keep it under 10% as possible. This also goes back to total number of counts. The more cards you have, the easier it is to keep that utilization low. Both medium impact factors can be helped out greatly by having more open accounts. Now to the scary ones. Derogatory marks. It sounds like a bad word. This is those collections, bankruptcies, and liens, but I know you guys are staying away from those. And last but not least, payment history. Payment history is one of the easiest things that you can do. You're basically promising the bank that if they loan you something, you will pay it back in full and on time every time. A secret that a lot of people don't know is that banks really just want your money. So if you have problems paying, you can usually call and negotiate a rate and they'll usually accept it. You may have to pay more in the end, but they'll be okay with that. This helps them get a little bit more interest and get the money back that they loaned you. Banks and credit cards may seem like the bad guys, but really they're helping your credit worthiness out. You can help out a spouse or family member by adding them as an authorized user to one of your good accounts that you have open. I told you guys I had something good for you. It's called credit lines. Credit lines are basically you're the authorized user on somebody's account who you don't know. You pay them a flat fee and they'll add you as an authorized user, which usually boosts your credit score dramatically, as you will have their credit history from that card added to your account. So this will boost your utilization and this will also boost your number of accounts that you have. It will also boost your on-time payments. If you guys know any secrets or tricks to boost your credit score or want to let us know what your credit score is, just drop it down in the comments. Don't forget to like and subscribe if you already haven't. Till next time. See ya.